We're halfway through 2026, and global capital markets are witnessing something that has never happened before. According to data released by BigGo Finance in June 2026, 5 companies, Anthropic, SpaceX, OpenAI, China's Unitree Robotics, and Zhipu AI, carry a combined estimated valuation of over $3.6 trillion. The IMF puts France's entire GDP at $3.56 trillion. These 5 companies, none of which have gone public yet, are collectively worth more than the entire economy of one of the world's largest developed nations. And here is what makes that number truly surreal. Not one of these 5 companies is profitable under standard accounting rules. The last time we saw an IPO frenzy anything like this was 1995, when Netscape, barely a year old and generating almost nothing in profit, tripled in market cap on its opening day and kicked off the dot-com bubble. What is unfolding now is bigger in every dimension. Let's start with the American side. SpaceX was first to move. Its S-1 prospectus was publicly filed on May 20, 2026. The company is targeting a Nasdaq listing on the 12th of June under the ticker SPCX, with a target valuation between $1.75 trillion and $2 trillion. If it hits that range, SpaceX will be the largest IPO in human history. But look at the financials. SpaceX posted a $4.9 billion loss in 2025 and burned through another $4.28 billion in Q1 2026 alone. Elon Musk controls 85.1% of voting rights, making him essentially the sole decision maker on all major company matters. The S only even includes provisions for additional equity grants if Musk successfully establishes a Mars colony. Meanwhile, Starlink's average revenue per user has dropped 33%, falling from $99 to $66. Revenue growth is under real pressure. OpenAI filed its own confidential S-1, with the SEC on May 22, 2026, underwritten by Goldman Sachs and Morgan Stanley. It is targeting a Q4 2026 listing at a valuation between $852 billion and $1 trillion. OpenAI reported $13.1 billion in revenue for 2025, but is projected to post a $14 billion loss in 2026. The gap between revenue and cost is widening, not closing, primarily because compute and model training expenses keep scaling up. Ironically, the highest valuation of the 3 belongs not to OpenAI but to Anthropic, the company behind the Claude model family. Anthropic filed a confidential S-1 draft with the SEC in late May 2026, targeting an October listing at a post-money valuation of $965 billion. Its annualized revenue run rate has surged from $10 billion at the end of 2025 to $47 billion by mid-2026, a nearly 5-fold increase in 6 months. It is expected to post its first quarterly profit in Q2 2026, approximately $559 million. The risk, though, is significant. Anthropic's discounted compute contracts expire in July 2026, after which monthly infrastructure costs could spike to as much as $37.5 billion. The revenue trajectory needs to stay steep just to stay in the black. On the product side, Claude Opus 4.8 scores 54 on the DeepSuite benchmark, well behind OpenAI's GPT 5.5 at 70. DeepSeek has permanently slashed its pricing by 75%, squeezing Anthropic from both ends at once. Now, the Chinese side of this story. Unitree Robotics, the humanoid robot company, went from starboard acceptance to approval in just 73 days, the fastest approval of any company on China's tech IPO market this year. It is set to list in July 2026, targeting a valuation of around 42 billion yuan and raising 4.2 billion yuan. Unitree has shipped over 5,500 humanoid robots, making it the world's largest humanoid robot manufacturer by volume. Its 2026 shipment target is between 10,000 and 20,000 units, and humanoid robots already account for 51.78% of 2025 revenue. 2 Chinese large language model companies, MiniMax and Zhipu AI, have already completed Hong Kong IPOs and are now pursuing dual listings on the starboard. The Hong Kong market's reaction has been explosive. MiniMax is up 700% since its Hong Kong IPO, and Zhipu AI has surged 1,600%. Zhipu has disclosed a starboard fundraise target of 15 billion yuan. MiniMax has not yet disclosed the figure. There is also CXMT, a memory chip maker whose starboard IPO has been approved, raising 29.5 billion yuan at a target valuation of 2 trillion yuan, with Q1 2026 revenue up 719% year. year-on-year. Market opinion on this IPO wave is deeply divided. Goldman Sachs, in its June 2026 report, revised its full-year US IPO fundraising forecast up to $225 billion, twice the 2021 record. Their argument, demand from passive index funds, combined with corporate buybacks running at $1.3 trillion annually, will absorb the supply easily. Of course, Goldman is also the lead underwriter for all three US deals, which makes their optimism somewhat structural. Bank of America's chief investment strategist Michael Hartnett took the opposite view in a June 2026 report, calling this the largest asset bubble since the railway age. AI now accounts for 48% of market concentration, a figure that exceeds the peaks seen during the 1920s. The 1970s, energy boom, Japan's 1980s bubble, and the 1990s dot-com era. During the 2000 crash, 81% of IPO companies were unprofitable. Today, every single headline AI name is in the red. If inflation forces the Fed to hike rates again, a liquidity crunch could turn this into a cascade. So why are China's AI companies choosing this exact window to flood their domestic tech exchange? 3 reasons, and they are all rational. First, policy tailwinds. The STAR Board's new pre-review mechanism has dramatically shortened approval timelines. Unitree's 73-day sprint is the proof. The American AI IPOs have set a new global ceiling for sector valuations. Listing now means getting priced at multiples that simply would not exist in a quieter cycle. Third, China's AI deployment curve is approaching a breakout point. Humanoid robot orders and enterprise model contracts are both accelerating. Investor sentiment is at its peak. The window for maximum fundraising efficiency is right now. Here is where the framing of bubble versus value actually misses the point. The 2000 dot-com era had companies with no revenue, no product, and no users, pure concept plays. That is not what we are looking at. SpaceX generates recurring Starlink revenue. Anthropic has enterprise contracts and is 1 quarter away from profitability. Unitree is shipping physical robots at scale. These are real businesses with real numbers behind them. But the inflated part is undeniable. A $3.6 trillion combined valuation prices in the next 5 to 10 years of industry growth today. Any single company missing its targets risks pulling the entire sector down with it. For China's companies, the calculus is straightforward. Raise the capital now before global liquidity tightens. To lock in the R&D runway needed to compete in the next generation of AI hardware and model deployment. Get the money while the window is open. So here is the question I will leave you with. After this historic IPO wave closes, are we looking at the opening chapter of the AI era, or the final page before a correction that nobody wants to talk about yet?